Welcome back, folks. Time now for some technical support, some big earnings out this week, and we're going to look at the charts of three companies that have some technical levels worth watching. Our chartist today is Jessica Inskip, Director of Product at Options Play. First up this hour, Procter & Gamble. You say this one has achieved a bullish breakout. Describe it to me. That it has. So you remember last year when tech broke out everywhere, we had these beautiful cup and handles. Well, Procter & Gamble has done the same thing. We have this cup, period of consolidation, and it breaks out. But is that the handle? That is the handle, yes. It did. Oh. Make you a better handle. And we went from 155, though, to 157 is this key area. And this was back in January of 2022. And that's what makes this breakout, is we have a move up. And like I've said before, this is psychological at this point. There are a lot of people that hold this stock around the 155 to 157 level. If demand comes in and overcomes that supply, then we have a very valid support zone. And you can see that's exactly where Procter & Gamble is following right now. So good earnings could be a catalyst to take it higher. And that 26 represents, this 26 moving average represents 2 quarters worth. 26 is the gray line? That is the gray line, yes. So that represents 2 quarters worth of pricing, which is indicative of the quarter over quarter earnings prices going up. So that's a good sign. I just want to see that maintained, the 150 maintained, and more importantly, that 26 weekly moving average. Love the cup and handle. Golly, that's cool. All right, next up, American Express. Bullish on this one as well, saying trend momentum is fading pending a catalyst. That it is. So this one you can see almost a similar pattern where we have this very clear area of resistance here. It was old resistance, and now it's our new support. And once we went through that, you see this candle right here. That is a good indication of momentum when breaking through what we were looking at with Procter & Gamble before. So I think it's a really good example. And that's the 182 to 188 level that was around October 2021. But what is important here? So I've switched our moving averages. This is the 13-weekly moving average. It's a little more volatile because it's a more recent prices. That is exactly support right now. What is a candle? You referred to that. What does that mean? Candle? So that's the wick. Yeah. So this is a different type of chart. These are weekly intervals. So a candle, the wicks here are the open, the high and low for the day. And then if it's filled in, that means it's actually red. Then that's a down day. The hollow ones are up days. So it tells me that it opened or it closed higher than it opened on an up day. Okay, so I visual representation. You there. I interrupted you're fine. There, but finish your thought, please. I mean, yeah, no, but that's a great example because this is a candle where it opened it closed higher than it opened, and you can see that momentum, and that's a weak range. Yeah. So it's important to define what that is to show how this really is a beautiful chart that's now on the 13-weekly moving average, which is 1 quarter worth of prices. We have another quarter coming in. If this isn't maintained and falls below, you can see what happens. All right, we're going to leave American Express and move on to Netflix. You say this one is showing major resistance ahead. Tell us about it. That it is. So this one, I added a little more time frame. Again, the 13-weekly moving average, 1 quarter worth of prices. You can see how this clearly acts as resistance here, here, here. And once this turns, we really get into a beautiful upwards trend, which is what we look for, those series of higher lows and those series of higher highs. But if we were to draw a straight line around this area where we're currently finding our major resistance, which is around that 640 level, that is exactly when this trend turned. So it's converging with the 13-weekly moving average at that time when the candle fell below that. So again, it closed lower than it opened and then really had that downwards momentum. So that's why it's a very key area of resistance we have to overcome in order to keep that bullish momentum, or I fret we may turn downwards like we did earlier. Okay, let's move on. You got a bonus chart. We need to watch the dollar, you say, saying it is flagging major resistance consistent with downturns. Explain. It is. So if we were to draw a straight line here and about here, so that's 106 to 17. I call this the danger zone within the S&P 500, looking at a weekly view with the U.S. dollar. Is that the S&P? This is the S&P 500 here. Up top. And this is the U.S. dollar. Dollar relative to what? Or just the dollar. Just the dollar. This is the index dollar. Yes, the dollar index. So when we get into this trading range here, the dollar's moving higher. It is consistently with downturns. And what I find very interesting, this level here, you can just, it's very clear when we go here, the market suddenly turns. And that's happening right now. And even today, you can look at the price action of the dollar and what's occurring with the S&P 500.
This is a pattern from a technical point of view. We look at a series of patterns. If it occurs over and over, then that's indicative of strength of the trend. Since this has happened multiple times, we're going to drive some attention to this because as it's gone into this range, which is here and
so what's
here
it telling us?
and here.
What's it telling us?
It's telling us that we have some major resistance coming up for the dollar. If we do not overcome 107, or we do overcome 107, that could be very bad for the market. It has bearish implications.
For the equity market?
For the equity market overall, yes.
Okay. Got it. Jessica, thank you.